If you've ever thought about investing, you've probably heard the term ETF, Exchange Traded Fund. It sounds complicated, but the idea is simple. It's a basket of stocks or bonds you can buy with a single click. But the ETF universe isn't just a universe, it's a bustling metropolis. And in this city, a few skyscrapers tower over everything else. These aren't just buildings, they're the headquarters of the most powerful players in the game. Today, we're not just window shopping, we're taking a tour of the executive suites. Who are these titans? What are their flagship products that form the foundation of millions of portfolios? And most importantly, how do you choose the right one for you? Let's get into it. The ETF market is home to hundreds of firms, but it's really dominated by a handful of giants. These aren't just participants, they are the architects of the industry. First up, BlackRock, fighting under the iShares brand. This is the undisputed heavyweight champion, the world's largest ETF provider by the sheer amount of money they manage. Their catalog is staggering. You want exposure to Brazilian biotech or German government bonds? They probably have an ETF for that. They are known for constant innovation and just massive global scale. Then you have Vanguard. Think of them as the people's champion. In the US, they have a unique structure where the funds are owned by the investors themselves. Their mission, which they pursue with almost religious zeal, is to drive down costs. Vanguard is the main reason why investing is cheaper today than it has ever been in history. They are the ultimate disruptors. Next, the originals, State Street Global Advisors with their SPDRs brand. These are the pioneers. In 1993, they launched the very first ETF in the US, the legendary SPDR S&P 500, ticker SPY. It's still one of the most traded securities on the planet. They literally started the party. And then you have the major challengers. Invesco carved out a massive niche with its tech-heavy QQQ ETF that tracks the NASDAQ 100, and newcomers to the low-cost party like Charles Schwab and Fidelity have jumped in, waging a price war that's fantastic for investors. These firms do more than just manage funds. They educate, they research, and they build the plumbing that makes the entire ETF market work. Okay, so we know the architects, but what are they building with? Let's look at the foundational ETFs, the concrete, steel, and glass of a modern portfolio. Most of these are passively managed, which means they're designed to simply copy an index, not to outsmart the market. The absolute bedrock for most U.S. investors is an S&P 500 ETF. This gives you a piece of the 500 largest companies in America. You have State Street's SPY, the original and hyperliquid, and you have BlackRock's IVV and Vanguard's VOO. They do the exact same thing, but often have slightly lower annual fees. It's the core of the core. But what if you want more than just the 500 biggest? That's where a total stock market ETF like Vanguard's VTI comes in. This tracks nearly every publicly traded company in the US, large, medium, and small. It's the broadest possible US diversification in a single package. A smart portfolio isn't just domestic. To get global, you need an international ETF like Vanguard's VXUS or BlackRock's IXUS. These invest in thousands of companies outside the US, from Europe to Asia, giving you true geographic diversification. Looking for growth-focused tilt? Meet Invesco's QQQ. It tracks the NASDAQ 100, the biggest non-financial companies on the NASDAQ exchange. Think big tech, big growth. It's more concentrated and generally more volatile, but it's been a powerhouse for years. Portfolios need stability, too. That's the job of bonds. ETFs like BlackRock's AGG or Vanguard's BND give you exposure to thousands of U.S. investment-grade bonds, government debt, corporate bonds. Think of it as the anchor that helps steady your portfolio when the stock market gets choppy. And then you have alternatives. You can buy gold without a shovel using ETFs like GLD or IAU, which hold physical gold bullion in vaults. And for the high risk, high reward crowd, there are actively managed ETFs like ARK Invest RKK. Unlike everything else we've mentioned, RKK doesn't track an index. A management team actively picks stocks they believe are on the cutting edge of disruptive innovation. This means higher fees and a performance that depends entirely on the manager's skill. It's a bet on a specific vision of the future. So there you have it, the titans of the industry and the powerful, low-cost building blocks they provide. From the S&P 500 core to international stocks, bonds, and even speculative plays. This is just the tip of the iceberg, but these are the names and tickers that form the backbone of modern investing. The most important thing to remember is that you are the architect. The right choice depends entirely on your own goals, your time horizon, and your tolerance for risk. There is no single best ETF, only the one that is best for you. Now you know who the biggest players are and what their most powerful tools can do. What's the cornerstone of your portfolio? Let me know in the comments below. Thanks for watching. Don't forget to like and subscribe for more content that makes sense of the market. See you next time.